Hey, what's up, everybody? Blue Collar Millionaires. We got a very special guest today, friend of mine. He's also helped my business grow. Jonathan Fodera. He's the business credit expert. He's going to talk to us about what you need to do to get your books ready, to get credit, what different programs he likes, and kind of the climate of just what he sees small business lending in. Jonathan, thank you so much for coming on.
Thank you guys for having me. It's a pleasure. I enjoyed last week and want to really reach out and help. Like my mission's always been to support small business owners, right? And so one of the things that people struggle with is one, how to position their business as best they can to get the right types of financing. Then the next step is, what is the right program, right? Because it's not always a bank loan, okay? It's not always a line of credit, although I feel every business should have a line of credit. And then where to go to source that or get that, right? Because banks don't have a lot of the other programs that, are very, very vital to people in small business, right? They just don't know about it, right? So let's just start from a basics. Like, what do you do? What should you do when you know you want to apply for financing? And guys, remember this, if you remember nothing else, it's always better to apply when you don't need it than need it and then go to apply. The reason being is there's so many different factors that are going to come into play that it will eventually catch up to you and you won't get the same terms. If that makes sense, right? So the first major things that underwriters are usually looking for most types of financing programs, right? One, what is your credit? And they don't just look at your personal credit. They look at that on almost everything except invoice factor. They also want to know what your business credit looks like. All right. So your personal credit, I mean, it kind of falls into buckets and ranges. So, 500 to let's say low 600s is one bucket, right? Then you have let's say 650 to 680. That's another bucket. That's just enough to get lines of credit. All right. And then you have, top tier, which is, 680 and above can get you an SBA loan, but, you really want to be well into the 700s. All right. And a lot of times that's difficult because people sometimes make mistakes, right? That you're putting a lot of the business debt on your personal cards, which is driving up your utilization. All right. You should be putting them on business cards. That's why it's important to build business credit.
Right, so real quick, Jonathan, on the personal credit, utilization. Yeah, I'm trying to figure why. Can you hear me now?
Yeah, I can hear you.
Okay. Utilization on personal, what is ideal?
I don't really think there's an ideal. It's how it's going to impact your score, right? My suggestion is pay it off at the end of every month if you can. Like that's the best in terms of like utilizing your personal and business credit. If you can successfully pay it off at the end of every month and not pay any type of interest, that's going to help out the most. A lot of experts will disagree and say, hey, it's 10%, it's 20%. You definitely don't want higher utilization than, let's say, 20 or 30%. But if you think about what a credit card does, whether it's business or personal, they're extending you that money basically free for 30 days. And once you pay it off, you're accumulating points, whether it's with Amex or it's miles. All right. So you're basically using the bank's money for free for 30 days and then paying it down and getting the points. That's what I truly recommend. However, some experts would disagree.
Cool.
All right. So go on.
What are kind of some of the things somebody would do if they were going to come to you to get their books in order, their credit cleaned up, to help you help them?
Well, that's tough. Like, first off, you should have financials. Okay. You want to have your business financials. You want to understand what your business looks like from a high level. Okay. Before anyone applies for anything, they should absolutely know what they're doing with those funds. Right. I get so many people that don't understand or don't know. They just think they want money. Well, money is just a tool. Right. It's a tool to help your business grow. and it's a tool to help you, accumulate wealth. So if you know what you need for your business, whether it's equipment, then you should get equipment finance. If it's a line of credit, you should keep what you're using the line of credit for short-term needs that you need all the time, like marketing, supplies, inventory, materials, adding to your payroll, and you want to keep some available for in case of emergencies, right? Line of credit is short-term use. Equipment, longer term, because you're going to use it over the next 5 to 7 years, so you should pay for it over 3 to 5 years, right? An SBA loan. What makes an SBA loan great? It's the longest term, and it's cheap. You use it to buy a building, you use it to buy a business, you use it to consolidate debt, right? Or you use it to keep cash, a lot of cash in the bank, right? To take advantage of opportunities, right? You typically, whatever you're using the money for, you should finance it over that time. Somebody told me they were going to buy a Sprinter van the other day, and they were going to finance it over, I believe, 10 or 20 years. That Sprinter van, he's going to be paying for that after, the van's going to be gone in 7 years, and he's still going to be paying for that. So I told him, hey, that's a terrible, terrible move. So you want to match up what you're trying to accomplish with the right financing program. And part of that is knowing what you need the money for and how it's going to help your business.
How does somebody get business credit?
Okay, so business credit. I'll go over 5 fundability factors with you guys real quick. It's a service that we offer, and it's not the easiest, but these 5 things you guys can all do or check, and it'll make it a little bit easy for you to at least start. Okay, so there's 5 things that you need to have squared away before you really start building your business credit. I call them the 5 fundability factors. Okay, first, you need a business phone number. Okay, it can't be a Google Voice number because that's still registered to Google. The phone number has to be registered to the business. Second, you need a business address. That business address can be your home address. Okay, what it shouldn't be ever is a PO box. All right, the reason it shouldn't be a PO box is that kind of sets off red flags for fraud. Okay, and fintech companies don't like that. Banks don't like that. My suggestion is have a business address, and if you work from home, that's fine. Just put your home address. Next, you need an actual business email. What does that mean? It means go to Google, okay? Instead of having Jonathan Financing at Gmail or Jonathan Business Financing at Gmail, I have Jonathan at Integrated Business Finance, right? It costs $9 a month, buy the domain, okay? And then they give you an email. You should have that, all right? Don't have a Ymail or a Hotmail. Have a business email, okay? Next, this is a simple one. You just need a business bank account. I wouldn't use any of these online accounts or online only. Have an actual business bank account, okay? Make sure that it all matches, all right? And then finally, to tie it all together, you need a business website. It could be a one-page website, right? And have everything that we just discussed listed minus the bank account. Right? Don't list that on. So you want the phone number, your email, and the address all on the website. And then what's going to happen is once you have that, I'm already assuming you have your business tax ID. You can go to Dun & Bradstreet and register, put everything in, and request your DUNS number. When you do this, they're going to try to sell you a bunch of packages, right? It's going to be monthly. You don't have to buy any of them, okay? And then once you have that DUNS number, just make sure anywhere online that your business shows up, everything matches and is listed. This way, if anybody does a data scrape, okay, everything matches. That's first and foremost. And then what you do is you can start opening trade lines. The more trade lines you have, the more you use, the higher the business score is going to be. Okay, business score works from 0 to 100. Now, once that is done and you have everything there, you want to start applying for trade lines. What are some trade lines that every business can use? That report. That's the key. Okay, because 93% of companies do not report. That's why I have a full team that does this for clients. What I would tell you is, you can go to Uline, open up trade lines. You can go to Best Buy and Staples and Home Depot and open up trade lines. And when you apply using your DUNS number and the EIN, not your social. all right, and confirm that, hey, I'm applying for business credit. And then you use it just like you would use a card. You know, you put something on there, you pay it off at the end of the month, right? And you'll slowly build your business credit, right? Like we have a service that does it. You know, we build $50,000 in trade lines, 6 months. That usually takes somebody, 18 to 24 months. And, we do that. We assign a team to you and they guide you through the whole process. This is just what we're going over is just the basics, right?
Dude, this is excellent roadmap.
Awesome. And here's why you want to have good business credit. It does make an impact. So right now we have an SBA loan that we're putting a lot of clients in. Okay. We're getting it approved in 14 days. It's called Flash Cap. As long as they have 680 credit, it goes off of in 2 years of tax returns. It goes off of the prior year's returns. You get you get 30% of last year's top line revenue. So if you did 500K, you can qualify for the max of 150. And it's a 10-year loan at prime plus 275. Because they raise rates, it's now what's it called? 7.5%. Okay, monthly payments around $1,300. We've actually had 2 people get declined because they don't have strong enough business credit. They have the personal credit, they don't have the business credit. Yeah. All right. Also, when you're bidding jobs like government jobs and municipality jobs, they do check your business credit. You might not get certain larger jobs. Okay, when you go to get equipment financing, if you don't have strong business credit and comparable debt, okay, you might not get approved, or you might not get the terms that you want. So this is why this factors in, and this is why this is really important to take care of.
Absolutely. John, tell me, I have an echo too, but yeah. If somebody doesn't know how to do this and doesn't want to figure it out, how can they go to you and your team take you step by step?
Yeah, I mean, what I would tell you is just reach out to me, or you could join. I have a coaching group that goes through all of this. I think it's stupid cheap. It's like $197 a month, right? And we have everything built out in a online like education platform. You can go through, and then we do live calls where you can ask questions on the live calls pertaining to that subject. And we just don't have business financing in there and business credit in there. We have a whole bunch of other things like payment processing, okay, personal credit, what's it called? Taxes, accounting, and legal structure. All right. We also have like marketing and branding, right? These are all things that are super important for a business owner to have, right? So you have access to trusted resources that, you get, I think if you're in the group, you get like a 10% discount on, whatever service that is. So business credit, you'd save about $300, doing. So it kind of pays for itself.
No brainer.
Yeah.
Is there anything, maybe this echo will fill out in a second. There we go. Is there anything that is available for the new business owner that hasn't already, or maybe not even a new business owner? I mean, I'm going to assume that there's been several businesses existing, doing good revenue that have not taken the time to build their business credit, to do the Dun & Bradstreet number, to get those credit lines. I know when I first started, I was a cash buyer. I didn't put my card on file because I didn't want it to be misused outside of my knowing. And then there'd be a massive bill at the end of the month that catch me off guard. So, yeah. But when I began to get hooked up with a third party vendor for the restoration side, this company said, hey, we need, actually it was government contracting. I was trying to get with GSA, and they said, we need to see that you've got some business credit. You need a Dun & Bradstreet number. I started going down that path, and I realized what you just said. There's a lot of people that don't even report, because I was doing a ton of business with some of these vendors, and they said, we can't take the reporting. I had a small business line of credit with a fairly decent sized bank. They said, we can't, they don't report to us. And so what can somebody that's already been in business but has not already started this but needs some capital, need a line of credit, is there anything available for them?
Yeah, I mean, listen, it depends on how they score out. So I'll give you our process. Like if anybody is looking for financing, the first thing we do is we collect some standard documents, nothing crazy, a one-page application. And then we actually put everything in a cash flow model. We pull their business credit, we pull their personal credit, all soft pulls, so it doesn't impact them, right? We review their cash flow, we review their time in business, and then we actually review it with them on the phone and then say, hey, this is what I think is available. So in terms of like lines of credit, we do lines of credit all the time. You could also go and, try your bank. Banks aren't as quick and they don't have the other programs, right? They're not going to give you 1,000-foot view of your business, and they're probably going to take a while to get back to you because they're really not aligned or incentivized to get you what you need.
So just to let people know, Jonathan he's like a consultant to you. He did it for me. I was thinking wrong when I came to you. And then he did give me a line of credit, and he told me why he was going to get me one, but I needed factoring because the line of credit was it would have had to have been massive to do what I was trying to do. So
you would have been tapped out.
Yeah. And you know what? I wasn't forward thinking enough. So that's what Jonathan does. He's more of a consultant. He's going to look at your stuff, go over it, you specifically and your numbers and where you're going in the next 1, 2, 5 years, and then put products in place for you. So, it was incredible for me, and it changed everything for us. I had cash flow issues every fall because I was running through. It's such a seasonal business. John, I want to ask you one question on. So, do you have 2 or 3 trade lines that report for sure? Because like you said to us on another call, a lot of places don't report when you pay, but when you don't pay, they'll report.
They report then, yeah. So what I would tell you is, I mentioned them earlier, but Uline, Best Buy, Staples should, I believe, report. Home Depot. The challenge that you also run into, guys, and this is why I strongly recommend using a team, is it changes. Like who is reporting does change. So people could be reporting that we used 2 weeks ago. And they're like, yeah, there's no benefit to us. We'll stop. So that's really important, and it's important to have as many trade lines as you possibly can report, and for you to utilize them. Okay. And if you're doing that, and like one of the things that's always good is like comparable debt, right? So this is a blue collar space. Every single business in here needs equipment. Don't wait until you need a $200,000 piece of equipment. Like for whatever reason, I've been financing a lot of ditch witches lately. Okay. Just a ton of them. Well, that's an expensive piece of equipment, right? You could be on the low end, 200,000, on the high end, like $500,000. That probably shouldn't be your first equipment purchase. Your first equipment purchase should probably be the skid steer that's going to cost about 40, 50 grand, or something along those lines. And then what happens is once you have that trade line on, or that's on for 12 months, you made 12 payments, it counts as comparable debt. So now the next time you come in for equipment financing and you need something that's 200,000, it's not such a fight.
Makes sense.
Yeah.
End of the year, guys, you need equipment. Now's the time to take advantage of that write-off.
I think what the problem is with most of us blue collar folks is we don't see it from the eyes of the bank, because they're looking at how much risk am I having to take to bet on this jockey, to bet on this entrepreneur. And if you start out slow, like you're recommending, and go with a smaller amount of equipment, ramping you up to where they believe and can trust you with higher amounts of revenue, capital loans, then it's going to be an easier sell, because they're looking at it as a risk assessment on their end. We're looking at it as, dude, why aren't you trusting me, man? I'm already been out here in the field working, making money. Like, come on, just give me $500,000. What's the problem?
That's the truth, right? But think about it. When you go build a house, you're not building a house with just a hammer. Okay. When you're building a business, you're not going to finance a whole entire business off of one program.
Right.
Because a lot of times there's other programs. So let's just go back to Kevin's example. Kevin is growing so fast that no matter what line of credit I provided for him, it would never be enough.
Mm-hmm.
All right. And the biggest problem or challenge in Kevin's business is the fact that he has to wait 30 days to get paid, which most people in this space do. So what do? If you can factor those invoices, it's usually way cheaper. And now you don't have the scaling issue. So as the business is growing, that factoring line is growing, and you're giving up, anywhere from like 1 to 4% for 30 days. Okay, so you're not giving up a lot of margins. You're getting the cash back in the bank. And then if you want a line of credit, you can still go out and get a line of credit after for the short-term things like supplies, materials, marketing. All right, and then you're building your business credit. You don't have to worry about when you guys are paying.
Can you deep dive into what factoring is?
Sure. So invoice factoring is anything. First off, it's only applicable to anyone that is business to business or business to government. Okay, invoice factoring does not take into consideration your credit. It's underwriting the credit of your clients. All right, you typically do this. Like if somebody wanted what we call a term sheet, you're going to send in an application. You're going to send in, let's say, 6 months of banks. You're going to send in a detailed AR report, a client list, a sample invoice, and any contracts that you have with your current customers. Then, my underwriter will go and look at, what they're approved for, your clients in terms of credit lines. And so let's just say you get $100,000 invoice, job's completed, you send that out, you're waiting 30 days to get paid. Okay, with invoice factoring, what they'll do is they'll give you anywhere from 80 to 90% of that invoice, sometimes higher. And so if you factored that invoice today, let's say at a 90% advance rate, $90,000 is going into your bank account tomorrow. They hold the rest in reserve. And then if that client pays in 30 days, let's say it's a 2% fee for 30 days. Then when that client pays, they're going to release the reserve minus the fee. So then you get $8,000 when your client pays. And so you just accelerated your cash flow by a full 30 days so you can move on to the next job. And all you gave up was $2,000 on the 100. So 2% of your margins. All right. So, and think about it, like when you have several clients and invoices coming in and always, you're always trying to get onto the next job. This is substantial. This is massive. This is how you grow. Because if let's just say I gave Kevin, and I don't want to get into too big details. If I gave Kevin a $500,000 line of credit, I think he would have blew through it. Okay? He would have blew through it, and it wouldn't have helped him because then he would have been in that exact same scenario once that credit line was maxed out. But by putting the invoice factoring in place, he was able to keep moving forward and keep growing without, one, giving up margins, and two, putting a lot of, using up all the available equity in that line of credit.
Yeah, man, that's massive. The fact that factoring, because I know I only got exposed to factoring through another mentor, probably I guess close to 8-9 months ago. It's the first time I'd ever heard that word, and I've been trying to be in my own business and entrepreneur since I was 15, really. Yeah. So the fact that that's available is huge. And I want to highlight the fact also that you come in as a consultant because me and Kevin both understand the power of having coaches and consultants in our lives. You are an expert in finding money. You are an expert in understanding the financial world of a business. And to have that as an extension of your team is so important because most people's, it doesn't matter what industry you're in, they will say my number one hurdle is capital. That's the reason I can't grow. That's the reason I can't take on new opportunities. And the fact that they can plug in at such a cheap rate in a mentorship and get utilization of your team that you've built and all of your personal experiences and expertise is just huge for any business to be able to have that at arm's length. Thank you.
I truly appreciate that. The only time factoring doesn't work too is progress billing, right? That's why for roofers it doesn't truly work. But there are other programs too. Like this can be set up with factoring, right? Let's talk about one of the biggest problems blue collar entrepreneurs have. You get a work contract from the government, municipality, or another business. Okay, let's say it's $1 million contract. And there is some sort of progress billing, or you don't get paid your first draw for 30 or 60 days.
Yeah.
You have to mobilize that job. You have to get the materials. You have to cover payroll, whatever equipment, you have to spend a ton of money, and you know you're not getting that money back for 30 or 60 days. All right. There is a program, and this is very, very unique. It's called project finance. It goes off of the work contract. So let's just say you need money, but if you get a line of credit, you're going to be in that same position, right? And every business should have a line of credit, but you got to use it properly. In project financing, they'll give you up to 20% of the value of that contract, okay, and only charge you on what you draw. So if it's $1 million contract, you have the availability to draw to up to 200,000. And instead of paying, let's say, 1 to 4% on everything like invoice factoring, you basically pay, call it, I'm rounding up, 5% on what's drawn for 30 days. Okay? So that 100 may cost you, if you draw down that 100, it might cost you 5,000, but it's still cheaper than the alternative, and it's only going off of that one job. Right? So now when you have, let's say, 3 or 4 contracts lined up, you can individually finance each job, and you could actually mix this program with invoice financing if you needed to. They use this in manufacturing too all the time.
That's huge. So what should we not be doing when it comes to lines of credit? For instance, going back to that original question I asked with the credit card utilization, is it bad to just let lines of credit or any, not just a line of credit, but any type of credit sit unutilized, just with the zero balance for a period of time?
Well, I that's a great question, Chris. Here's why. If I know everyone on this call remembers like 08, 09, right? So in 08, 09, what did a lot of these credit facilities do? The credit cards and the lines of credit, they cut people off.
Yep.
Economy was shrinking, they cut people off right away. So let's say you had a card that had availability of 30,000, right? Well, what they cut it down to 5 overnight. Same thing with lines of credit. So my suggestion is always keep a little something on a line of credit, okay, if you can. And if the line of credit is at 0, that's not a big deal, but see where you can invest money into growth for your business and utilize that, even if it's $5,000, even if it's $10,000. See what you can do to improve the business by utilizing a little bit of it and keeping it there. Because right now we are definitely in a recession, and I don't think we've seen the worst of it. I think the worst is still to come. So being financially fit, being financially stable, having your ducks in a row now is a tremendous, tremendous advantage.
Yeah.
Okay. John, speaking on that, if you were a blue collar business, and you see this recession coming, what would you do over the next 4 months, between now and the end of the year, to prepare yourself, getting tools ready, financial tools and stuff? What would you do?
That is a freaking awesome question, Kevin.
We all want to know.
Yeah. One, I would have, and this is actually something I'm going over in the group, but make sure your credit, both business and personal, is high as possible. Okay. 2, if you truly feel that way, I've been telling my clients to get into that flash cap program, that SBA flash cap program. Because you can get an extra, basically what they're allowing you to do is take 150 every 6 months, max of 450, as long as the revenue provides. I would be cash heavy going into this. Okay. Next, any equipment, anything that you need, forecast out the next 6 months. See what it really is going to look like. All right. That's from a financial standpoint, right? And if you don't have a line of credit, you better open one now. Okay, I would open one today. I can get them done in 24 hours. Shameless plug. Now, in terms of the business, right? One, keep your book straight. Okay, that's another one. And also, you want to look for things that are quote unquote recession proof. Are there services you guys can add that no matter what, people are going to need in good times and bad? Okay, who else services the same clients? Right, I'm giving you guys a ton here. Who else services the same clients that you can build a win-win-win relationship with? Yeah. Okay, like for me, I come in here and train and help you guys, and vice versa. Okay, for me, accountants, right? So accountants are great referral partners. right? I can serve their clients better than the banks can, and they know that their clients are in good hands. Also, anyone that's B2B, right? Those are my good referral partners. Figure out who can be an asset to your business and who also can you help with their business. Like, how can you serve the same market at a higher level so the client wins, you win, and that referral partner wins? I would be looking to set up relationships like that over the next, I do it now if you can, right? Because that's going to be vital. All right. So not just from a financial standpoint, but from a strategy standpoint, right? Because you really want to bring down your cost per acquisition, the cost it actually you have to spend to acquire a client, down to near zero. That doesn't mean shut off marketing, guys. Keep on the marketing, but make sure you're doing that. And also, when you work with clients, make sure they are having an amazing experience. Okay, the best marketing you guys can ever have is word of mouth from your existing clients. And then what I would do is maybe double back and see what else you could help your current client book with. Is there a service that you can offer? Is there something else you can do for them, right? Because that will increase the lifetime value of that client, right? So you want to bring your cost per acquisition down, you want to build relationships, and you want to increase the value of your, the lifetime value of your clients. I think those things will truly help you over the next, call it 6 to 24 months.
And that's good stuff. I totally agree with, you have to make sure people are having a great experience. And for you, I told you, hey, I'd like to do a video for you and a text and a write-up. And I sent you an email and a video.
Right away.
And because I believe in it. I want my name on it. I know he's going to take care of you guys. And when you feel like that about someone, you will recommend them. I have recommended them. I'm on this platform recommending them. But everybody knows when somebody asks for something, or you're like, I'm not really going to send that over. And in a recession, you need people to really do that. But he's connecting with accountants. So we always talk about this in our group. What other service businesses can you connect with, build win-win-wins, and you guys refer each other? And then, of course, you got to come through 100% with these people because they're putting their name on the line for you. Yeah. So much good stuff. I wanted to tell everybody, I'm going to write up the notes of this and kind of like bulletin boards and in a post later today, put it in here. We're going to have in the comments, John's going to put his email, contact info, everything. I already saw somebody asking about getting a line of credit here. So we want to make sure that you get, you have John's contact. And then we're going to this is such a complex subject, and it's the key to growth in business and really getting to that next level. You need a partner. I mean, I think of some of the things I used to do when I was young. It's crazy. I used to take those checks that come in the mail for your credit card, and I used to finance my business like that. I would write a check for $5,000, go get a lot of work, pay it off. But then I remember I went to Chase Bank one time, and I tried to get like a nothing loan, like a $15,000 loan. And they were like, no, your utilization. I was like, what is this guy talking about, utilization? Because it looked like I had probably bought like 100 pairs of Air Jordans. I didn't know that I looked horrible. And the other part of it is we like to say, well, I don't have any debt. I don't use any credit. You should give me a $500,000 loan for that machine. Yeah. But they want to see that you have credit. They want to see you use it. Absolutely. I did the same thing. I said, I don't have any debt, nothing. They're like, good. Then we don't know if you can manage money.
You're a ghost.
They look at it short-term debt, like revolving, like credit cards, right? And then long-term debt, like SBA loans, equipment financing. There's a difference, right? If someone comes in with heavy utilization, doesn't look as good as someone that has an SBA loan that they're making all the payments on, and they have 3 equipment financing loans that are being paid off successfully. That's an easy win.
It's like having a mortgage and you've been paying for 3 years, as opposed to some having $20,000 on your credit card where you're just paying minimum. That doesn't look good. I mean, this is so much good stuff today.
I would recommend highly that everybody that gets that is watching this video plug in with Jonathan, because there is a deficiency in financial. So many people are financially illiterate. And what I mean by that is the simple fact of, some people might say, well, and I've been taught this by family members that are much older than me and have already experienced the majority of their life. They're in the retirement stage, and they will say, don't go into debt for anything. The only thing you should go into debt for is for a house. And it teaches right the opposite of what you're saying, Jonathan, and what me and Kevin have experienced is, by building up credit lines and a credit history, it allows us to scale at a much quicker rate. Just think about if you had to sit there and earn every dollar that you reinvest into your company, how long it would take you to earn that so that you could build up to a capacity to be able to do more volume. You shorten the timeline by leveraging debts from other people's money. And it's changed my company's. I mean, every vehicle I've got, even if I've got the cash to pay for a company vehicle, it's going to be financed, because I want more cash sitting in my bank so that I can weather a storm. And also it makes me look a little more bankable with having cash sitting in the bank as well. So we've got to change our philosophy of thinking. And I know most of the blue collar community thinks in that aspect, like Kevin just said, man, I don't have any debt. You should want to give me a line of credit right here. But the reality is you've got no track record. You're a ghost. And I can testify, debt has changed my company's financial trajectory and the scalability of it. And ultimately I make more money, because you have to look at, what's the debt costing you? What is that money costing you? And what are you able to make with that debt? If you're making more than what the cost is, then you're doing nothing but arbitraging that debt at that point. You're picking up the spread. And that's what we forget about. Interest rates go in 5, 6, 7. We're like, oh, it's too expensive. But what are you making? What's your return on investment with someone else's money? 20%, 30%. Most companies do a 20% margin or better. Mm-hmm. Take the debt. You're still making money.
Yeah. And also, you're usually turning that debt over quicker than it's due.
Yeah.
Right. Yes. So the other thing that you have to look at is, how quickly are you turning that over? So that 5%, or let's say even the SBA, 7.5 right now. Okay. Because they raise rates. Well, that's over 10 years. You're telling me you're not going to turn that over every single month at 20% and pay it off? You have to look at the velocity of money too. And I have a great idea. Yeah. Next week, why don't we talk about, we'll do a cheat sheet on what you guys have to do, everything to prepare, and then how to analyze these things. Okay. And then we'll maybe touch on another program, because I enjoy this, guys. Like, this is high level stuff with friends, and I could do this all day long. Okay. Because this is what people need. And if people know this going into it, you'll be unstoppable. You know, I could tell you all day long what I pay on some of my investment properties. You guys wouldn't believe it, right? It's definitely above market, but the difference is they're getting paid off, and there's still a significant ROI, and they're just saving you time.
Yep.
Another thing that blue collar guys do, and why they should get in your group, and this is something I did for years, we don't even want to talk to our bankers. We don't want to talk to our accountants. We think, like, I don't know if you ever did that. I used to just I just want to get my taxes done. That's how I used to think. And about 10 years ago is when I really started, like, hey, this is a consultant that can help me save money on taxes. I was the person trying to pay the least amount to have somebody file my taxes. And guess what they do when you do that? They just file your taxes. They don't give you any savings. I look back now at all the different savings I'm getting from accountants and paying my son every year and all these different things and the Augusta rule and all kinds of other stuff. And it makes me sick. Like, why wasn't I doing this before? I'm paying more money for that accountant, but he's bringing me so much more. So you have to look at this like as a financial tool. You need a consultant, you need a partner to get you to make millions of dollars. You're not going to do it alone. And why would you even want to? You want to focus on what you're great at, and then talk to somebody like John and say, this is what I'm doing. How do I get there?
Yeah.
And you could see it. He loves it. This is what he does.
Yep.
Thank you, guys.
So, hey, it was great having you on. I'm going to write up some notes later. John's going to put his contact info right in the comments and everything, so you guys can reach out to him. And we're definitely going to have him on again, and we're going to go over little things, and we're really going to try to help you guys. He's going to help us get to the point, where we can use all these tools to grow our business really fast.
I love it.
Appreciate it, Jonathan.
All right.
Thank
Thanks,
you,
John.
guys.
Talk
Thanks
to you
for
soon.
the opportunity.
All right. That was awesome.
Let me get us off.
Man, he